Hey guys, it is Julie here with TipRanks. Welcome to our live stream. We're going to be focusing on earnings season as we are getting into the full swing of Q1 and a lot of big earnings coming out in the next week or so. So, in today's live stream, we're basically going to look at some of those big names and walk through some of the stuff we look at ahead of earnings and how we can get prepared. Now, you may notice Richard Allen is not with me today. Unfortunately, he did have a family emergency, so he could not join us. So you guys are just stuck with me. On that note, though, please make sure that you're chatting up in the comments so that I don't feel like I'm just chatting with myself here. I'd love to hear from you guys what companies you're excited about, different things that you're looking at too when we go through all of these. So make sure you leave your comments on the side there. I'm really excited to chat with you guys. And yeah, we're going to start off with a couple companies that have already reported this week. We had some big names and big events happen. And then we're going to get into some other big names that are coming up next week too. So to start off, I want to chat about Netflix. Now, of course, they just reported yesterday and have plummeted since then. So let me share my screen here with you guys. Here we go. So Netflix down 35% after their earnings came out. I mean, just dropped right off the cliff here, a pretty dramatic decline. And that all had to do with their lower subscriptions and everything. So coming down here in our news section, we had 200,000 subscribers lost when they were calling for a gain of 2.5 million. So obviously a massive drop off there. And what's worse is when we're talking about future projections, they also shared that they're expecting to lose more in the next quarter. Now, one of the really great features on TipRanks that I love to use that gives you a really unique insight is the website traffic tool. And if we take a look back, this is one of those instances where we probably could have seen this coming, that there was a big drop in users. Right here in the website traffic, these last couple of months, we have big declines there. And that obviously showed in their results. So that's a really key feature that you can take a look at for some of these companies, that their business is based by a lot of online content. Now, of course, Netflix, we've been chatting about this a bit. We had to talk about some streaming stocks on Twitter last week. They're up against way more competition than they've ever had before. They were a first mover in the streaming space, did fantastic during the pandemic. Of course, the whole stay at home, everyone was taking to Netflix, but now we're seeing a huge drop off. And it's really concerning, those future projections and what they're going to end up doing. Now, looking at the analyst forecasts, we're sharing again here. There we go. So analyst forecasts, when we look at it, $342, not bad. 51% upside, okay. But that is largely because the stock dropped so drastically that now anything above this is going to be a big thing. But we have a lot of hold ratings, and a lot of those, all of these hold ratings coming in yesterday. We even have a sell. We do have one buy in here, which is interesting. One bullish person left. And this was from Guggenheim, Michael Morris, lowering the price target dramatically, though, from $555 down to $350, and removed Netflix as his best idea after their membership and Q2 outlook came in below the consensus. So saying that it was a sober view of near-term headwinds. So obviously, a lot of struggles for Netflix there. I guess now the question is going to be, how do they right this ship? How do they turn it around? And what kind of changes can they make to stay competitive? I mean, we've seen them maybe lag slightly in some of the original content that they're bringing out compared to some competitors, and also increasing prices, trying to crack down on families sharing passwords. So these moves obviously didn't really work in their favor, and now we're seeing a lot of users move to these other streaming services. So would love to hear from you guys what you think Netflix can do to kind of change things around here. I mean, the silver lining in this perhaps is that we might be near a bottom getting down to a low price here, getting dangerously close to that $250 mark, because we're up about 9% in the aftermarket, recovering a bit, but down 55% year to date. So been a rough go of it. So that is Netflix there. Now, moving on to another big stock that just reported, and that, of course, is Tesla. Now, they just reported their results pretty much like half an hour ago while I was getting ready for this. So let's take a look. They're always a big name to watch. And of course, Elon Musk has gotten tons of news coverage lately with his whole Twitter debacle and his takeover offer to purchase them. And anything Elon Musk does, of course, often has an impact on the Tesla stock, a lot of reflection there. But now, let me pull this up here for us. Tesla just came out with their earnings and, of course, came in well ahead of analyst expectations. So the consensus was $2.26. They came out above $3. It's not reflected on here quite yet because the numbers just came out. But what's impressive is that they had great results, and this was all amid different supply restrictions. So they have their lockdowns with the plant over in China where they had to stop production, just inflation, the cost of goods. But with Tesla, their margins actually increased as they are kind of known for passing along some of those price increases to customers. So they still came out well ahead of expectations there. Great numbers across the board and still solid projections moving forward too. They're expecting to increase that vehicle production capacity by 50% every year over the next few years. They just had the Austin plant and the Berlin plant open up. That'll be ramping up production and stuff. So seems like a really solid day for them. They're up 5% in the after hours here. Of course, they went down about 5% during the day, probably a little anticipation of the earnings. What I'm really curious about as well, Elon Musk is attending this, and pretty much as we speak, their conference call is going on. Now, Elon said a bit ago he wouldn't be attending every single earnings call, only if he had something to say. And he's attending this one, so I'm sure as soon as I get off the live stream, we'll be looking up to see what type of exciting news he delivered, if any, and if that has any further impact on the stock after hours. Now, website traffic on this has been pretty consistent, a little peak up this last little bit as well. Let's see what else Tesla has going on. Of course, retail investors, very positive. 4% of all portfolios hold Tesla, and on average, investors allocate over 27%. So I think a lot of us know Tesla is one of those retail investor favorites. A lot of people love the stock, love Elon Musk. And we've seen it increase here for most. But if we look at just our top investors, we have seen a decrease too. Now, we did see a lot of growth this past 30 days. Bring the chart back up. So coming into March here, we had a lot of growth. So very likely investors just locking in some profits there and everything. Analysts, I always love to look at the analysts on Tesla because it is one of the most divisive stocks, it seems. We have buys, holds, and sells. This is the first time in a while we're seeing actual upside projections here too. Because often when we look down here, we have very bearish people on the Tesla stock with dramatic price targets that always bring down that average. But we can see the most recent ratings here, both coming in 1,300, 1,400. Daniel Ives is a well-known Tesla bull. So that'd be 43% upside from here. So analysts are still feeling incredibly bullish about that. And yeah, as Chase said, so Elon has something to say. Exactly right, Chase. Whatever it may be, I mean, he might just be, I don't know, giving us a small update on Twitter, but hopefully it's something Tesla related that brings the focus back to Tesla and kind of diverts some of that attention from the whole Twitter things. That's obviously dominating headlines when it comes to that lately. Now, moving forward on the list, we're going to get into some future earnings as these ones already happened. One that I do want to look at is American Airlines. Now, this one I find interesting. Any of the airlines, of course, have had an interesting go of it these last couple of years. Obviously, global conditions with the pandemic were quite the struggle. A lot of airlines, any travel related company really crashed. And we've had this kind of tepid recovery as the pandemic subsides and the world starts to go back to normal. A lot of that pent up travel demand coming to fruition and people starting to take advantage. And we saw a big indication of that earlier this week. And if you look at any of the main airline companies, their chart looks very similar this week. And that's this little uptick here, right on April 18th at the end of the day. And that is when it was announced that the mask mandate was going away, basically. We had that judge come out and say, we're done. They shouldn't have extended it. So now, no masks on planes, and people's excitement of the travel becoming easier and easier is there. There's a lot less restrictions as far as testing going. So we saw a big vote of confidence when things jumped up here. Now, of course, when we look at the SMART score, they do have an underperform rating. They have been struggling. Like I said, it's been an on and off recovery for airlines. We've seen hedge funds decrease their holdings. Still very positive on the retail investor side, though. This is our top investors. But over the last 30 days, a 6% increase in holdings there, which is impressive. And of course, one of my favorite tools, the website traffic, we're also seeing steady increases here. So from the same quarter last year, the total estimated visits to their site is up nearly 35%. So that is a notable increase there for sure. And when we look at their earnings, we still have a negative forecast there, the $2.39. But compared to last year, some big improvements, almost double there. So they're on their way up. We can see that trend here, hopefully seeing some better results. The last few, they've been able to come in ahead of analyst expectations, if just slightly, no blowout numbers here. But analysts seem much more bearish. And I'm kind of surprised that we don't have any buy ratings here. They're definitely not feeling optimistic, it would seem, which, like I said, I just find a bit surprising given things moving the way they are. But when we come down here, pretty much all hold and sell ratings. So negative sentiment there. I am feeling slightly more bullish on airline travel stocks. I'd be curious what you guys think. If not American Airlines, Southwest is reporting as well next Thursday on the 28th. This one, we do have some buy ratings, a bit more optimism there from analysts. Looking at the top analysts, slight upside of 3.5%. So maybe not expecting a ton of growth, but at least some buy ratings being included there. Although our most recent is a sell from same analyst on the other. And with Southwest, we've seen a much more dramatic increase there. So when we're looking at their website visits from the same quarter, they're up 38% year over year. So if those give you any indication, we're definitely seeing a bit more popularity there. They're getting close to being back in the positives as well. They're expecting that negative 31 cent. So we're closing the gap a bit closer. And their last earnings, they were positive with a 14-cent earnings per share. So any airlines, I think it's a really interesting niche these past couple of years to see how they're responding to this recovery story and the continued challenges that they've had during as well. Now, who else do we want to talk about? Oh, another good one we have coming up. So this kind of goes on the back of Netflix, and this is another streaming company, although in a very different niche. So this is Roku. Roku has their own streaming services and platform, but they also focus a lot on the actual hardware and their own like Roku branded TVs and everything, giving the platform to host some of the other streaming giants. So I think it's a really interesting niche that they have within the streaming sector where they're not just their own streaming platform, but they host the other ones as well. And again, they've had a rough go of it. I think the start of 2022 has been particularly difficult, especially for some of these newer companies, the more speculative tech companies. It's been a hard time. That inflation, people were just jumping ship and heading over to some more stable and maybe kind of hedge against inflation stocks. So they are definitely down a good bit, like 69% over this past year. But now that we're maybe finding a bit of a bottom here, it could be an interesting opportunity. Looking at their website traffic, we're seeing pretty standard here for this next unreported period. Year over year from the same quarter last year, we're up 23%. So that's a nice indication. And we're just seeing that upward growth too. So we're seeing them gain some popularity. New sentiment, we are a bit negative on the new sentiment. Of course, these guys dropped a bunch this past day, as many streaming stocks did following Netflix, right? Netflix is the big leader in that niche. So as a rising tide lifts all boats, so does it the opposite. And with Netflix taking that big hit, a lot of these streaming stocks did as well, as I think investors get a little more cautious about that future growth story and what that's going to look like now that there's so many more competitors. But with Roku, they're definitely a lot newer. They have a lot more growth ahead of them and everything too. So I think they're one to keep an eye on. Analysts coming in with a moderate buy rating and an upside of 65% for the next year. So not getting quite back to those previous highs, but still some very impressive growth potential there. And we have a lot of buy ratings and one sell. So this guy's feeling bearish on this stock. He sees critical strategic issues. So the newly combined Warner Brothers Discovery that'll combine will have greater leverage over Roku, which is valid. I'm excited about that WBD merger. I think they'll be a neat competitor in this space. And worried that US consumers are moving away from connected streaming devices to internet-enabled TVs. Which is interesting because I feel like Roku does a lot of that streaming there anyway. So, I mean, sure, valid points there, but I think there's a lot of growth potential as well. So we have seen some price targets lowered, but a lot of headlines saying that they think it's going to recover. So definitely some optimism there. They did just launch an agreement with CNN Plus for their news streaming service. And I did read that there was some disappointing signups initially out the gate with that, but still early days. And of course, their latest was a big extended distribution agreement with Amazon. So of course, who doesn't want to work with Amazon? Massive giant. They're always a good company to tie on with and everything. So I think a lot of potential there. Watch for that consolidation at the bottom, get in at a good price, hang on for a little bit. You know, these companies like Netflix plunging so much, there's still a lot of volatility out there. And the big thing too, it seems, in the market recently has been the future guidance. And I think especially in 2022, with these inflation pressures, a lot of variables in the world, global issues with Ukraine and Russia, people have been looking for a bit more stability in the stocks. And so there's been a lot of drastic reactions, especially following earnings, if the future guidance isn't impressive, isn't what people are looking for. So people want to hear that the future looks bright and that growth is going to be no problem. But a lot of companies, we're seeing supply issues. You know, there's the chip shortage that's continuing to plague a lot of companies. So yeah, basically with these earnings, even if they're coming out with great results, it's that future projection that is getting a lot of them in a bit of trouble and kind of causing their stock to move. One of those, I'm trying to, I think it was Facebook that took the big hit after their last earnings. Forgive me, I have a lot of stocks on my list today. Oh, and Chase says that Roku is a green check mark and need that good entry. So yeah, I definitely agree with you there on that one. All right, let's take a look at good old Meta Platforms. Although I still always call it Facebook. It's like Prince. It's going to be the artist formerly known as Facebook. So these guys, yes, it was Facebook. They took a massive plunge back in February following their last earnings report. And if I recall correctly, that was again very much to do with their guidance. We came in short here on the earnings per share. And now our new forecast here is down a good bit at $2.58. So, I mean, their last few were well above that. There's no reason that they shouldn't be able to achieve that there, but we will have to see. Analysts definitely feeling optimistic here. We have a 58% upside, 47 ratings, which is a ton. Everybody's weighing in on Meta platforms here. And of course, they have a lot to do with the metaverse and a lot of ongoing big projects like that always keep them quite buzzworthy. Let's see what else we can see here. We do have a big decrease in hedge fund holdings. So down about 7 million. We have a lot of new companies opening up, but where's our negatives? Holy smokes, and this shows you all of the hedge funds. Here we go. So some big positions reduced. A lot of numbers there. Obviously, that's why it all gets added up at the top here, but we've seen a decrease of 7.1 million shares in this past quarter, but still a lot of activity going on. There's 203 hedge funds that hold the Facebook stock, so a lot to dig through there on them. Now, who else should we chat about? Let's look at Snap, also coming up next week, I believe. Oh, sorry, tomorrow. Snap is coming up tomorrow, so that one's a bit sooner here. I have a whole giant whiteboard with all of the earnings next week. It is going to be insane. We have so many of the big companies, pretty much all of FANG, excluding Netflix. Actually, complete side topic here. I read an article as well following Netflix's big drop yesterday. Plus, they had the big drop after their last earnings as well. That FANG might no longer be including Netflix. We might be looking, I think they said FANG with an M in there. Doesn't roll off the tongue quite as nicely. I'm not sure if that was maybe Microsoft that would be replacing them, but Netflix might kind of not be considered that big stable growth company anymore now that they're finally facing these competition issues and losing a bit of their edge there. So I don't know. We're going to have FANG without Netflix. Could be interesting. But back to Snapchat here. So Snapchat, they took a big hit this past year, but their last earnings, they did quite well and had this big jump up. And they've been going fairly sideways since then. Looking at website traffic for them, we do have an increase here, so that bodes well for their upcoming earnings report. Big increase year over year. And we're looking at a negative 17 cents earnings per share. So we're getting really close to consistently being in the positive. And that last earnings report in February was the first time that they did report a positive earnings at 1 cent, one earnings per share, but it was positive in the green. Investors love that. Now, we estimated earnings per share loss of 9 cents in the last quarter, and they came out ahead. This time, estimating a larger loss down at that 17 cents. But hopefully, Snapchat comes out with some impressive numbers. It would be great to see them in the positives again. I think that might be a bit of a stretch. But again, just seeing that trend in the right direction, I think will be what a lot of investors are looking for. Also, we have Jake saying, yay, his first live stream. Welcome, Jake. Thanks for hanging out. I appreciate you guys chatting. I said, unfortunately, it's just myself here today. And as much fun as it is just talking out loud to myself, it's always really great to hear from you guys, your feedback, what stocks you're watching. So thank you for all the comments and chatting with me tonight. Analysts feeling incredibly bullish on the Snap stock. I shouldn't say incredibly, we do have some holds, but overall coming in as a strong buy with some big upside potential and a lot of recent buy ratings coming in the last few days ahead of these earnings reports. So good to see that analysts are feeling optimistic about this earnings. I think that'll be a good one to watch. Now, what else do we want to look at as well? We have so many coming up next week. A lot of big names. I'd bring up like Google and stuff, Microsoft, but those are such solid. I don't think we're going to see any massive surprises when it comes to some of those big companies. Those are pretty reliant, and I won't say you know what to expect, but not as many big surprises coming out there. Oh, Hood will be an interesting one, especially with all of us retail investors. Obviously, Robinhood just going public. I shouldn't say just. It's been a while now, hasn't it? Maybe a year now? When did they first? Coming up on a year. So still within this past year. Obviously, a lot of excitement right out the gate. Robinhood has a very loyal customer base there, retail investors, and we've seen some pulling back dramatically after that. Their earnings coming up, projecting a negative 38 cents earnings per share, and they have not historically done so great in their earnings, obviously contributing to their performance this past year since going public. But they have introduced recently, new sentiment. I saw an article about extended trading hours and everything, getting into some more crypto. So they're definitely bringing in a lot of different growth plans and everything. Website traffic, though, not looking super positive for them. We're definitely seeing that downtrend. I think there's a couple different factors to this. I think Robinhood had tremendous success and popularity during the 2020 pandemic. We saw a massive influx of investors, retail investors, who now had a lot more time on their hands, sitting at home, investing their own money, really unique conditions with the market and how things were moving. And I think, unfortunately, Robinhood has seen that impact of the recovery story, where in the sense of recovery, a lot of people are using it less. So that hasn't worked in their favor. Basically the opposite of some of those travel ones. These stay-at-home stocks, similar to streaming like Netflix, now that people are not at home as much, have less time, are feeling the impact of that with less traffic. So I would love to be optimistic here and see them turn around, but it could be another rough one if they're seeing that downtrend still in website traffic and such as well. Analysts very much divided amongst this one, with a hold rating, pretty evenly split price targets, upside potential of 58%. But again, some of these price targets, when you look at 3 months old, there's that much bigger upside potential because the stock has fallen so much since then. So a lot of the times when we're looking at these price targets, it's really great to look at the actual timing of when they came out, because we can see what the stock has done since then. On that note, Devin Ryan is extremely bullish on the stock, giving it a $41 price target with a 282% upside. Let's see if there's any commentary here. So 2021 represented an abnormally strong business, higher interest rates. Although trading volumes have held up, uncertainty has led to substantial pullback. Okay, so I'm not hearing a lot of, catalysts here for the price target. It does look like he lowered it from $45, but still feeling bullish. So power to him there. I would love to know why he's feeling as bullish as he is. Downgraded a couple times. Yeah, so Robinhood's taken a bit of a beating now, hey? So it'll be interesting to see what they come out with next week. Robinhood reporting on Thursday, the 28th as well. Any other stocks you guys want to go through? Like I said, we have a ton of big names coming up next week. A lot of the huge companies, Microsoft, Google, and like I said, nothing wrong with Google. They're very stable. We have unanimous buy ratings. That's pretty much the norm for them. 36% upside here. They're, kind of the poster child for analysts, so nothing shocking. We request a look at Square or Block. That is like Meta Platforms. That'll always be the company formerly known as Square. Now, are they reporting soon? I didn't have them on my list. Okay, so a couple weeks away. They're coming up here soon. We're looking at earnings per share of 22 cents. So definitely down from last year's projections. But they came in at 27 cents before, so we're on track there. We did have a slight miss back there, just by 1 cent though, so we're not looking bad. Website traffic. And traffic's been on the up and up, so that's looking well for them. From the same quarter last year, the estimated visits are up over 30%, so we're trending in a really strong direction that way. I always like to come to the stock analysis. I think it summarizes everything very nicely. So definitely been a rough past year for them here, hey? But decreased here and stuff. Retail investors, I always love to see what everyone's doing. Small increase, small decrease, not a huge numbers though, not some big exodus by any means. So that's good to look at there. Like I said, 31%, or sorry, 34 ratings here, 24 as well, but both price targets right around that 60% upside. So definitely some bullish outlooks here. Do with some price targets lowered. Sequential improvement in their Cash App download and usage data is a positive indicator. So I think that's what we're seeing with that website traffic as well. It's great to see that traffic increasing there. So it could be a very positive outlook coming up for them. Matterport. Gotta be honest, I don't think I've heard of Matterport before, so bear with me here. All right. Okay, so we got Matterport. Let's take a look. Brush me up here pretty quick. Spatial Data Company. Okay, so AI-based platform allowing users to create a 3D digital representation of any built space. Very cool. Okay, so we're in the technology sector here. Looks like, not surprising, many of these tech stocks, like I said before, it's been a rough go for any of these newer speculative tech stocks. In 2021, we saw everything blow up. I mean, everything. It was the year of the SPAC. We had just pandemic conditions. Everything went crazy, but it's been a tough year so far here. But let's see. Do we have earnings coming up here? Okay, May 24th, a bit further away. Looks like we have been downtrending a bit on the earnings. That would make me a little hesitant just to see these numbers continuing to decline. So it'd be great to see those go back to the, well, not positive, but closer to the positive instead of going the other way. But I'm guessing this is probably a newer company. It looks like they're fairly new to the market as well. And analysts feeling bullish. So we have 7 analysts here. Do have some 5-star analysts, a couple of those, good to see. John Walsh feeling very bullish. His price target here. So did lower it from 23 to 13. So that's a, pretty big price target change. But at $13, like we said, with what it's currently priced at, just shy of $7, that would be a healthy upside potential. So nothing wrong with that. But continues to see significant opportunity around digitizing the built world. Their digital twin captures differentiated from competitors, which extrude walls from blueprints or flat pictures. Industry adoption has been slower than forecasted by the company. So I'm guessing that's where a lot of the headwinds are coming on the earnings per share. So not knowing a ton about this company, I would say this is one that's going to maybe be a longer term hold, waiting for that growth as they start to actually build that client base and see some steady growth from there. And who else we got? NOG, Northern Oil and Gas. So they're coming up on May 8th, it looks like. $1.28. We have a company that's expected to be well in the positive there and expecting a big increase from the same quarter last year. Also, love seeing this. Always like to see that nice steady incline and that growth quarter over quarter. Looks like they've been darn close to their expected earnings and stuff as well. Both ways, normally just a few cents off. So no massive surprises there, which is always nice to see that consistency and predictability as well. Coming in with a 7 out of 10. There we go. And especially some of these gas companies, amidst some of the global concerns, we've had a lot of people go in there as gas prices have been increasing with different supply issues and everything too. So not surprising to see that this has been going in a nice direction. And actually, being oil and gas, we also have a dividend, and I love dividends. Just throwing it out there, something you might not know about me. I am a big fan of dividends. Love that consistent income. I just love the company's stability when they're willing to pay out a dividend and reward their shareholders. Big fan of that. And, analysts also feeling bullish here. 9 ratings altogether with 7 buys and 2 holds. Top analysts are unanimous buys. That's great to see, with 50% upside still. So I really enjoy that, especially if they've seen a lot of growth already this past year and last few months specifically. It looks like analysts still think there's plenty of room to go. And we do have some high rated analysts here giving it 20 plus, 50 plus percent upside. So great projections there. This is one I'll definitely take a closer look at. Okay, so basically, guys, I think that's most that I want to go over with you. When we're looking at these, oh, we have one more. All right, we'll take a look at this. MMP, Magdalen Midstream. It's going to be busy next week, and this will definitely be moving the markets a lot as we see some of these big names, especially a lot of people look to, Microsoft, Google, Visa, these big companies to give you a real insight to the market and how things are going, plus those future projections. And I'm just going to share here. Jim Pratt said, metaverse name. So big in AI and VR groups. Okay, good to know. Thank you for sharing, Jim Pratt. Chase just said, I wish Tesla paid a dividend. That would be exciting. I think we're many years away from that happening. Tesla very much still in that growth stage where they're reinvesting all of their profits into their own business. But that'll be a very exciting day when eventually they are that stable blue chip company with those dividends coming out. I think that's not impossible, but probably a ways down the road from here. Looking at Magdalen Midstream. So $52 here. Another assuming oil and gas midstream company here, seeing a lot of growth, actually up 25% in the past year. Year to date, up about 16%, seeing some great growth. This catches my eye too. We have an 8% dividend yield with a lot of growth. So this, I know, says 13 years. That's as far back as the data goes, but it could be even longer. Dollar quarterly. Yeah, that's a very healthy dividend and looks very consistent as well. Now, do we have earnings coming up May 4th? We have a bunch coming up May 4th, which is great to see. Pretty consistent here, earnings per share. Not a huge increase from last year's, but that's not an issue. This looks like pretty stable here. Looks like we've been exceeding a lot of analyst expectations. Coming in, yeah, well ahead of earnings estimates here for the past year. And analysts, so we have buy ratings. We have a very modest upside potential, but again, looking at the timing of our ratings can help us understand that a bit more. So we can see we do have some older ratings from 3 months ago, probably following their last earnings report, that had a slight downside. And our slightly more recent ratings with upside, the stock has been growing quite well this past few months, couple of weeks especially. So these were probably much higher upside potentials initially, but the stock has grown in such a way that now it's getting close to those price targets. So when I see some of these outdated ones from 2 months ago, especially with earnings coming up again here soon, I think we can expect that after May 4th, when those new earnings come out, we'll have a lot of analysts reiterating price targets and adjusting them to show a bit more growth potential where they think it can go beyond this. 25%, sorry, reading comments here. Golden Ocean Group, Jim just shared. Now we're getting onto a dividend train, a 25% dividend. Holy smokes, Golden Ocean Group. You've spiked my interest here, yeah. A lot of growth, got a 9 out of 10 here as well. Very positive. No, I just need to do. Okay, ownership and operation of dry bulk vessels. Yeah, so not surprising that these guys have seen a lot of growth these past few weeks. Like we said, a lot of people moving towards some of those more, defensive kind of stocks, hedging against inflation, consumer staples and everything. 103% this past year and a huge dividend. Thrice yearly, 17, yeah. Well, thank you for sharing that, Jim. So I think that's most of the ones I kind of want to go over, give you guys some insight how I love to use the site. Looking at that website traffic tool is a really unique insight to how companies are going to be reporting, and just seeing how the analysts are weighing in, especially as we get close to some of these big names. We're seeing a lot of bullish outlook, which is great to see. And hopefully we see these companies deliver accordingly and no big surprises. As we've seen so far this year, any company missing or having bad guidance is just sending their stock crashing and a lot of other concerns in the market. So I'm really fingers crossed that next week we see companies with a much more positive projection for the coming year, kind of dissuade some of these supply concerns and different inflationary risks. And yeah, that's kind of my hopes for next week. Let me know your thoughts in the comments down below, what you're most excited to be watching. Make sure you share this. Come and join me on my morning pre-market show. Check out TipRanks TV. We have fantastic, unique content being posted over there on the daily. So let us know your thoughts on that as well. Thank you guys so much for joining me today. We will see you back here in a couple weeks, and I'll hopefully have Richard Allen back with myself then as well. So have a great night, guys. Thanks for hanging out.